Welcome to the ACCU podcast. James Phifer.
Kenna, Melvin.
It's been a crazy week this week. A few things I wanted to hit on. One of them, I guess, as it relates to your position. With all the things that are happening out there right now in the banking industry, and we don't really have to get into the weeds on what happened there. But I'm curious what your thoughts are as it pertains to what needs to be done in a lot of these communities. Over the past couple of years, the cost of goods and services have continued to rise and rise and rise. And we heard from board members probably in the 2018 to 2020 timeframe say things along the lines of, oh, well, we're waiting for the economy to cool off before we start the project. And of course, with the COVID relief funds that came in, that created a lot of inflation where the power of the dollar, went down pretty exponentially. And then couple that with the increased cost of insurance, all of the raises in assessments have really gone towards paying premiums instead of being able to fund the deferred maintenance in the community. So for those of you that don't know, Kenna is the construction division manager for ACCU. And is really focused on helping boards understand projects and get it across the finish line. And these are adding some complexities. So can you elaborate on some of what you're going through and what you're seeing in the market?
Yeah, so we're definitely still seeing a lot of boards and even homeowners raising concerns whenever we bring up a large project. We present the costs to the board and the homeowners at their meetings, and a lot of homeowners or board members will raise the concern of, oh, well, if we're looking into this loan now, are the interest rates about to drop? Like I've heard on the news that the interest rates are going to drop in the next year. Why don't we just put it off and keep waiting for the right time?
Okay, perfect. Stop, collaborate, and listen. We're back.
Yes.
Brand new invention. This is not a brand new invention. We've heard this so many times. This is reminiscent of what's been happening in years prior. We're waiting for the market to cool off. Then that didn't happen, and now we're hearing, oh, I heard on the news that interest rates are going to come down. Where are they hearing this? Are we challenging them in that moment? Because I'd love to know where we're hearing that interest rates are going to come down.
So I think that there are so many places and sources that people are getting their information from, whether they're credible or not. Everyone has their go-to outlet for information and news, financial advice, all of that. And it can be really hard to combat those comments because we also don't know. No one can say for certainty what's going to happen with the interest rates, with the economy in general. No one knows. We have all these predictions, and typically those predictions go along with certain groups of people and how they want to persuade and implement their own plans. So they're trying to convince people that this is going to happen or this is not going to happen, so you should make this decision right now.
When you're bringing the deferred maintenance up in a meeting, there are a subset of people that are uninterested in moving forward with repairs to deferred maintenance because they feel like they're not getting the best bang for the buck. Would you say that that's appropriate?
Yes, I agree with that. And I think that it's a combination of either the specific maintenance concern doesn't affect them specifically, whoever's raising the point, so it doesn't feel like an important need to them, and maybe they have a different project that they would love the money to go towards instead. Or it could also be the case of, well, I talked to my own contractor and they said that the project could be done for a fraction of the cost, and there's no reason why the numbers that you're bringing to us are what we should be going with. And so then they're challenging the funding plans, but then they're also challenging the contractors, the approach, whether we're phasing it, whether we're doing all at once. And it really just snowballs into this major conversation where there's so many points that need to be addressed, but the comments still come and they keep coming and get into this situation where you can't even break it down anymore in the middle of the meeting.
I think their heart's on the right spot, right? They feel like there's a level of mistrust when it comes to are we getting the best deal? Are we paying the right amount? And if there have been times where contractors overcharge homeowners associations, and That's really what I value about your position with our company, right? I'm just going to come out and say it, is that having somebody with our company that has an additional level of oversight when it comes to margin is super important. So right off the bat, I understand where they're coming from. I've also been on the other side of that coin where a board member's brother-in-law or a friend of a friend is willing to give a better price on putting a roof in, and it rarely ever goes well when somebody is coming in at really, really cheap prices. I've seen erroneous things that have occurred, and at the same time, I have also seen where people are, taking bribes, taking money from contractors. And I think that is something that is inherent mistrust between the associations and management companies, that things are happening behind the scenes that they're not aware of. I get that. We are constantly trying to combat that all the time. I think there's a right way to do things. If a service is being offered, then a service should be charged for. Historically speaking, most management companies have required that their managers be the ones that are responsible for all of the construction when things come up on their communities. I feel that there are several issues with that. Number one, all the communities in a portfolio are paying their management fee. And if an association A has a fire or a flood or a disaster, maybe wind and hail, something to that effect, that requires a lot of attention, is it fair to all the other homeowners associations that manager's attention is now primarily for one community, leaving the rest of them kind of, waiting for management? I don't think that's fair. And so we have to make sure that we provide somebody exactly like Kenna's position to be available when things happen, that we have the proper resources to allocate to those particular situations. But those costs should not be the management company's costs, right? When these projects come up, the time, the oversight, everything that boards are requesting, we as a company are doing our best to deliver, but that comes at a fee, and those fees oftentimes need to be negotiated. My point that I'm trying to make is make sure that you agree on a fee that's appropriate. What tends to happen is in our industry, and I'm not sure that this is going to get published, maybe it will, maybe it won't, but there have been some really bad actors out there for a long time. And I think that's the mistrust that most of these people are feeling. And when these homeowners are coming to the meeting and challenging, why are you paying that much? We should be paying less. There's two sides to that coin. One, they may not be wrong. I think for our company, we know that we hold a certain level of accountability. But I can kind of understand where they're coming from. Would you agree?
Absolutely. Yeah. I think that it does come down to you pay for what you get. And a lot of times a high cost on a project, although you may be able to find someone who can do the work for less, are they going to have the proper insurance coverage? Are they going to have the correct expertise to get the project done? They might tell you that they can do the work and it might look okay, but then it could fall apart down the line. Or if something does go wrong, are they going to come back and answer to you when you call them back out there to fix their mistakes? And a lot of times a higher cost gives you a lot more security in terms of you get a better partner with your contractor, you get better coverage, you get better work, and you get better communication as well. Because communication goes a long way, and I think that a lot of homeowners get frustrated when a lot of work is going on, but they don't know about it. They don't know that it's coming, they don't know what the plan is, they don't know the schedule. They just see contractors out doing massive projects on their association, and we tend to like to work with the contractors who communicate well to us as the management company so that then we can get the communication out of the homeowners so that everyone knows what's going on. And you don't just see someone putting a ladder up on the side of your building wondering what they're doing, because that's no fun for everyone.
Is that not the way we're supposed to do it? Just no communication, just all of a sudden.
Yeah, transparency, communication, it's huge for all these projects. It makes everyone feel way more at ease. It makes the pill easier to swallow, because these projects do cost a lot of money, and we're not trying to say that it's easy to write those checks. It's not, but we're just trying to put in place the right supports that will help everyone get the work that they be done in the best way possible.
I'm going to pull this back around full circle because we did get off topic. Really valuable information, because this is what we're dealing with when we're going to communities and trying to help them get across the finish line. One of the things that you were talking about that I just wanted to represent here is sometimes the cheaper person's desperate, and they are using money from one project to fund one that they're currently on because they have not been very good at their money management, and that it can leave a community in a really, really bad position. So just food for thought when somebody comes in and it's a too good to be true bargain. There may be some fundamental reasons behind that. Having a company that is well managed, is fiscally sound. They're going to be around to provide a warranty. They're not going to be knocking on our door the next day for payment, and they're not going to be using the funds that you put down for down payment to fund a job that they're currently working on. So just wanted to highlight a couple of those things.
Definitely.
Inflation's happened. The Fed really is struggling right now on whether or not they bring interest rates down or whether or not they continue to charge interest rates. They came out with the 0.25 to combat inflation because obviously there's too much money in the system right now. At the same time, even though they're denying it, and we're going to see whether or not this is true, they turned the printing press back on again, especially after SVB and Signature and these banks failed. They are starting quantitative easing, so they're doing both at the same time, which devalues the dollar. So what we pay for gets less. And the point I really wanted to get to is the longer we wait to do projects, the more damage that occurs. Right?
Exactly.
We have one project. We have several projects. So I'm going to use a deck project for example. We know that water is getting behind the asset, and it's causing more and more problems the longer we wait, which causes additional expense for repair. Right? It's that coupled with the fact that the dollar loses value with the more inflation that occurs, and if they've started quantitative easing again, that's going to make things more expensive in the future. If you had the opportunity to pull the trigger for a board that's on the fence, what recommendation would you give them right now?
I would tell them that although interest rates are high, if we're looking at a loan option, we could wait and hope that the interest rates go down. But there's no guarantee of that. And then when you also take into account material costs and labor costs, which are also skyrocketing right now, even if the interest rates do go down in the next few months, in the next year, the material costs are still going up. The cost of living is going up. And you might get a lower interest rate, but your costs are still going to keep climbing upwards because it costs more to get people to do the work. It costs more for the products and materials that you need. So I would say your best hope is to proactively plan, check all your boxes, check your work, make sure that you're not getting taken for a ride with the pricing, make sure that you understand what you're paying for and that it seems fair and reasonable, and then sign that contract. Because up until the point when you sign that contract, those numbers could change every single day. Proposals that come in typically will be valid for anywhere from a week to 2 months. And then those prices go out because the contractor can't let you then sign a contract in 4 months when the material costs have skyrocketed, the labor costs have skyrocketed, and they can't give you that same price. So in order to keep the stability and know that you're going to get the work done and make sure that it doesn't get worse and that the cost fluctuations don't go all over the place, sign the contract as soon as you feel good about the numbers that you have and the contractor that you're working with.
Well said. The associations have an obligation to maintain the integrity of the properties, and these investments should not go by the wayside because previous boards, previous management companies, previous homeowners didn't want to raise assessments. If you are stuck right now with a very, very daunting task of funding deferred maintenance, get ahead of it as quickly as you possibly can. I have a boatload of success stories from associations that came looking for professional management, not to find a contract that was equal price to what they were currently paying for more service being provided. And that's really important. If you're a board that is unhappy when you're out looking, figure out what it is that needs to change. And if you have a lot of maintenance in your community and none of it's being addressed, and you're taking a look at your budget and there's not enough money there, you're not going to find a management company that's going to pay for it for you. You're going to need to make the hard decision. Find a management company that's going to help you make the correct ones, going to help you find a banking partner that's going to be perhaps helping you fund a loan, a contractor that is going to stand by you and be a good partner through the project, through the process, and be around for the years after. Because one thing I can guarantee, if it's a large project, you're going to need them to come back. So treat that relationship like gold. Make sure that you treat them well and that they're treating you well. It's going to be a give and take. Oftentimes when you get into these projects and you start pulling, building envelope off of the front of a building, like siding or EFIS or, whatever product is out there, you may find some nasty stuff back there.
Absolutely.
And it's not that the contractor is trying to squeeze more out of the association, but if it's behind the surface they cannot see into and they come across it, it's not their obligation or responsibility to pay for it. They're going to notify you, and be careful about nurturing that relationship and be kind through the process. It may not be good news, but you're going to need to get through it. Making these big money decisions with community money, it's daunting, it's overwhelming, it's certainly a scary task. Many of us have never written $20,000 check before. Trying to approve $1 million project with money that didn't necessarily come from us, but we're responsible to it. It's a huge responsibility for a volunteer. So really make sure when you're interviewing your management companies that they have the right processes and the right people and the right resources in place to help you out. We strive to do that on a consistent basis. So I have to throw my little commercial in there because this is important to the foundation of what we envision management companies being. The organization, the relationship building, the oversight, understanding what's going into projects is super important. And we've worked on this for a while. Kind of go to a board, sit down and understand what their project is. What does the board want? What is it that they're asking for? Before going out and wasting time with contractors on, bid it this way. Well, we didn't like that bid because we can't afford it. So bid it this way. Well, we can't afford it right now. Haven't bid it this way. And before we know it, we're 4 years into it. And these contractors have put thousands of dollars into the bidding process. How about we change things a little bit? And when we're serious about getting a project done, we're going to get a
ROM,
which is a
rough order of magnitude.
Why is that important?
That is extremely important because it allows us to work with one contractor, figure out the scope of work that's needed, wanted by the board, and possible. And we work with one contract at a time so that we get that initial cost estimate. Once we have the cost estimate, we can look at the funding that the association has available, whether they have reserve funds, whether they have enough in their operating to do this, and we can break it down into phases to figure out what the best approach for this project will be. And once we figure out where the money is going to come from, whether that's a loan, special assessment, some other sort of funding, then we can move into the true bidding process with additional contractors. And we already have the scope of work from the initial RON bid to pass over to these new contractors who are going to take a look at it, and they know exactly what we're looking for. There's no question. We're going to get apples to apples bids, and it's going to make the board's decision way easier because they know they have the money, they have comparable bids, and they can sit down and say, I really like this contractor for XYZ reason. This price may be a little bit higher, but I really think that it's going to get the job done way better. And it's much easier than having to go through 3 to 5 proposals that weren't all bid the same way, try to get them to be apples to apples, try to get things rebid, redone, rework the scope, and then we might end with a contract that we like, but we have no way to pay for it because we haven't considered funding yet because we were waiting to get to that final bid.
Having somebody who knows the construction side of things. Managers are wonderful. Managers are so good at reading documents and understanding community association, doing inspections, covenant enforcement, advising boards, running meetings, understanding Robert's Rules of Orders. so on and so forth. What I think is unfair is also to expect them to know everything about landscaping. And also it's really unfair for them to be expected to know all the different types of construction out there. So what happens? What I've seen historically speaking is that a manager will say, hey, contractor, go bid this fence for me. I need a fence proposal, without any information about whether or not it's wood or if it's composite or if it's vinyl. And so what happens is that the contractors, rightfully so, come back with a bid amount that's going to protect themselves. But because there was no information, now all of a sudden there's 3 bids that come in all different ways, and the manager may provide that to the board, and the board's sitting there looking at this stuff going, huh? Why is one $1,000 and the other one $100,000, right? So when all of a sudden we get a ROM, a rough order of magnitude, to understand that this project is going to be a $500,000 project, and we go out and we get the funding in place, just as Kenna said, and when we get to the contractor, they know that the money's there to be awarded the project, and they're going to go the extra mile to be awarded the project this time. And we have somebody here that's going to make sure that these projects are going to be apples to apples, overseeing it the whole way. So when we go to a board meeting, we lay it down, and the cost estimates are so close to each other because it's the same material from different contractors, and perhaps there's some variances in there, like a warranty time frame. And so that's going to adjust the cost a little bit. But how much more does that build trust when it comes to getting these jobs done? And I get so excited about that, right? And I think that's where this industry needs to continue to elevate when it comes to the contractor side of things.
Yeah, I agree 100%. It makes the whole process move way more smoothly when it's thought about proactively. And that's another thing, is that you shouldn't be waiting for maintenance needs to become emergency needs. That's not going to help us plan our funding. It's not going to make the costs any cheaper. And it's not going to make the project run any more smoothly. We should be proactively looking at what assets we have on the property that fall under association responsibility and making sure that we're maintaining them throughout their life, and not just waiting for them to fall apart and then, oh, this fence completely fell over, we need to rebuild it now. Well, we probably could have saved a lot of money, a lot of time, and a lot of effort if we had just kept up with the maintenance before it got to the very end.
And so many association board of directors are asking for that. Be proactive, be proactive. We were mismanaged because these things weren't done. Maybe that's half true. Maybe that's 0.25% of the way true. But your management company does not have an open checkbook to go and do things without the permission of the board. It really is incumbent on board members to make decisions. So pull the trigger. If there's one thing that we will ask board members to do, it's be more diligent in pulling the trigger and allowing things to get done. Spend the money to get these projects done. We have in certain cases spent years and years getting more and more bids and being told we're going to wait until something else happens down the line. And it gets to the point, as Kenna just said, it's so dilapidated. What would have been a pretty simple repair at one point in time has turned into a complete replacement. And at that point, it's usually a new board of directors, because so much time has elapsed. And they may look at the management company and said, well, you mismanaged the project. And to us, there's nothing more frustrating, because it was years of labor and work and getting the information and bringing it forward, only to be told by members in the audience and perhaps board members that we're currently servicing that we're going to wait until something else down the line happens. And so pulling the trigger today and getting the job done is super important.
Exactly. And that's not to say that by keeping up with your maintenance, these maintenance projects aren't going to be a large cost. We're not saying that every maintenance need can be maintained for $1,500. There are going to be some projects that need to be maintained and it'll help you in the long term, but it's still going to be a large cost. Painting is a great example. If you're sticking to your normal painting cycle as you're supposed to be for the life of the buildings, making sure that you're keeping up with it, it's not going to be a cheap project, depending on the size of your community. But it's going to be a lot cheaper in the long run than having to replace the whole exterior of the building because you didn't maintain it,
over the course of its life.
Without that paint on there, especially in Colorado where elements are so hard on paint, right? If you keep kicking that can down the road, to your point, all of a sudden you've got bigger problems.
It's also a siding job and painting.
Rather than just routine painting cycle.
I could talk about this for days and days and days. Obviously, a lot of passion from my perspective on this, and I know yours too. Building trust with boards is something we're certainly exercising on a consistent basis, trying to bring some of these new ways to approach maintenance in a community so you feel more comfortable pulling the trigger, as we were talking about a little bit earlier. So thank you for spending time with me today on the podcast. If we don't give it up now, we may end up being here on Monday morning.
Yes, absolutely. There's never an end to these topics.